a very wild day. Okay, so it's gonna be in 23 minutes here, so we have some time to do the analysis, but I'm not gonna take trades until NFP. Anyways, what we're gonna do probably is do our analysis here, wait, and after the analysis, figure out what we're looking to take, right? And then we're gonna wait for those positions to come, but likely positions will be after news. So we're gonna wait for numbers to come out at 8:30. Numbers can come out however they want to come out. The markets could react to those numbers however they want to react. Doesn't matter. Bullish, bearish, it doesn't matter at all. What matters though is waiting for news to play out and then you taking advantage of the volume from news. That's what we do. So it's not about predicting where news is gonna go, right? News can come out, shoot down, shoot up, shoot down like 200-300 pips. Doesn't matter. What we're gonna do is wait for candles to close and then take advantage of the leftover volume, because with NFP, you wouldn't just move and hover. You'll move and continue to drive, right? Typically, that's what happens. So today, luckily, not luckily, I lied. Nope, you have two folders. I was gonna say luckily you have one folder, but you have more folders at 10, which makes me think that assuming today's numbers come out a certain way, price will push in a certain direction. I believe if that's the case, then whatever direction I'm pushing right now is the direction we should be pushing through NFP. And then after NFP at 10, you have an actual direction on price. So I don't think the real direction of the day will be printed today until after 10, which means that we could stay till 10. But if we get a trade, between 8:30 and 10, then that's it for us. We'll call it a day. You know, it is what it is. But if numbers come out, if the news comes out a certain way, pushes price in a certain direction, be very cautious of that, because any given point at 10, you can actually move in the actual direction for a day, because you have another major folder at 10, which is called prelim UOM consumer sentiment. So days like this, typically I would see not volume will come in 8:30 obviously, but in terms of direction, you won't see that happening until maybe a little later in the day. So just be a bit cautious if you are trading gold today. Understand what part of the cycle we were in, and if price were to print whatever that is at 8:30 and then print a different direction at 10, what would that be on the higher time frame compared to a smaller time frame? So I'm going to break it down here in a second. That's what I'm assuming. I like to give my assumptions before my analysis, but typically that's what would happen. All right, so let's go down to gold here, and let's go start the Zoom call. I'll send my Zoom link out, and then we'll get started here, and then yeah, we'll get to it, right, chat? So it's gonna be a wild day today, but to be honest, I don't want to be here past 11. You know, again, I want to be here. I want to be out before 11. But obviously, if we happen to be here past 11, it is what it is. But I don't think we should be able to. I think we should be out by, like, to be honest, before 10 at most. If we get a trade at before 8:30, of course. All right, let me just send my Zoom link, and I'll get some water. And then I'm gonna come back, and then we'll do this analysis, all right? Hope I was good though, chat. Hold on. Should have showed you guys. I got a new monitor yesterday, so that's why I have a monitor sitting here. That's like my old monitor, which I probably gotta get rid of. I have too many monitors now. I have like 5. 1, 2, 3, 4, 5. I got a 1440p yesterday. 1440 27-inch monitor. So my first 1440, but kind of cool. Sorry, chat. It's not Coke or anything. Don't worry. It's fucking water. Okay, it's just sparkling water. It's not. I don't think it's, you know. Don't think I'm drinking Coke at 8 in the morning here. Okay. Some of you guys can be thinking that. All right, yo. All right, yo. So let's do this analysis, man. So let's see what's going on today. We got the monthly time frame. So let's start with that monthly time frame. I know the monthly time frame doesn't really matter sometimes, chat. Like today, it doesn't really matter. because I mean, it matters, but in terms of it won't affect today's analysis. You know, no matter what the monthly does today, in terms of the way it looks right now, it doesn't really affect how we close today. We're the first week into the month. We're not even in the middle of the month yet, and there's lots of time before the monthly closes, right? So that's why, like, it's not too important what the monthly does right now at all. It won't affect your 10-pip trade, like I always say. But it's good to look at because it gives you an idea that you can have in the back of your mind, and you can build on that idea as the month goes on. So every day, if you're saying the same thing, like last month, all I said was 2020 will get tapped. We said that the entire month, right? And each time you said that, the smaller time frame started to make a lot more sense over time. And then you saw that whole scenario play out with the monthly time frame. So yeah, that's kind of why I look at the monthly. It's just more so just to give me the overall direction on price, but in terms of today's charts, it's irrelevant. But yeah, this is the monthly. So starting with the monthly, it looks like we are currently, again, same thing we did yesterday, or we said yesterday about the monthly. This is somewhat your resistance being formed there. Now, there's no confirmation of this resistance being formed just yet. What we do have though is a strong rejection. This was the opening of the monthly candle. First thing price did was come up, create a top wick, and then it started to reject very heavy back into the range, which I'm very thankful for, because I would rather trade where we are right now than all-time highs, because it'll be a lot more complicated to be all-time highs than trade because there's no traffic to the left, right? So this is good. But the thing is, you have 21 days left into the monthly. Now, just because you rejected hard doesn't mean you're going to continue to drive down completely for the rest of the month. There's still a slight chance that at any given point, price could still flip bullish and close above the range. But the good thing about this is that the monthly time frame. So you will see how it closes, right? If you close above and you're able to hold this support to the left here on price, which is right around here, then next month's candle should be able to come down to the bottom of the range, right? Which then will take you down towards these levels on price at, what is this? This is, I think, 1990, right? Because if you close bearish here on this candle, right, you'll be closing back into the range. Therefore, if you're closing back into the range, you should be good to come down to fill the range, right? Typically, you'll see something like this. But again, you have 21 days left, and there's no confirmation of a resistance formed just yet. There's slight resistance being formed, but it's not confirmed, and it won't be confirmed for another 21 days. So until then, we can just assume what the possibilities are, but we want to draw out what the scenarios are. So first scenario, I'll assume, is we close back into the range, and next month's candle continues to drive down to fill the bottom of the range at 2090 or 1990. And then if it closes below there, then obviously you're going to continue to push down back into the range, which then will take you down just like these other candles did to the left-hand side, down towards these areas here, right? Which could mean that we may have another swing trade coming very shortly, if that's the case. But I'll look into that later on if we actually do close next month, next year probably. But yeah, that's the monthly time frame, right? So the monthly could close back into the range. It can close below, or it can even close, like, for all I know, doji, right? If it closes doji, that won't be too bad at all, because then you're still respecting the support to the left here, right? But therefore, next month's candle, what is it going to do? Is it going to fill the range? Is it going to come back to the range? I don't know. But what I will say is that it will close doji off of a bullish candle, and therefore chances of us driving up towards the wick fill is very high. But again, 21 days left. We don't got to worry about it just yet. We're just drawing out the possible scenarios that could play out for the monthly. Now, the weekly is closing up in 8 hours here, which is going to be the NY close tonight or today. And it looks like you are breaking back into this range here. So it's not really about whether or not you'll found resistance yet. It's more so about, like, if you can close. Because if you can close back into the range, then that's your confirmation of your resistance being found, right? However, if you don't close in the range and you close bullish respecting 2038, then what that means is that next month's candle could still drop down, because I'm assuming it will still close bearish, right? If it were to close respecting that level. But the thing is, there's a support right here being formed, and any given point next month's candle could just range, because there's not a closure back into the range completely. You might just end up doing something like this for the months to come, right? It might be a little boring, but or next week, sorry, not the month. But yeah, comes down to how it closes in 8 hours here. If you do close back into the range, then perfect. Your next support on price is going to be sitting you right around here in this area at 1940. So therefore, next week's candle, if you close below, I think in this case, if you close below 2040, then next week's candle today should continue to drive down back into the range and fill the rest of the range coming down towards 1940. All right, so that's what I got going on for the weekly. I think it's gonna be a very interesting week next week, just because this week was more of an indecision level, right? Because there's news that came out, or sorry, there was the all-time highs that happened on Sunday, so it was a pretty wild week to start with. But I think next week, once things settle down, it'll be a lot more easier to trade in terms of trend. You have a much better direction, and I think today's NFP will set that up for you for next week and the months to come. But yeah, that's the weekly. All right, so just keep an eye out on how it closes here in 8 hours. I know it's gonna be after NFP, so price is gonna be nowhere near where it is right now. I doubt it. 2028, I'm pretty sure we'll be either way above or way below. I don't think we'll be sitting in that range the whole entire day today. If it does, then it'll surprise me. All right, but yeah, the daily time frame looks very clean today. So I'll tell you guys why it looks very clean today. So you can look at that from two perspectives, right? The first perspective is overall, you can say that, okay, well, there's levels to the left here that we are currently rejecting off of. So you can see that there's rejections here, rejections here, rejections here, right? And rejections here, obviously. And all these things, all these things had in common was the fact that it all closed back into this range here, right? Because this one respected the resistance and drove down. This one respected, drove down, respected, drove down. If this one broke the highs and now it's coming back into the range, you know what I mean? That's liquidity being grabbed for us to rip down. Technically, that's what it's showing you, because we're breaking back into the range. These counts, if these counts were able to, okay, these are all bullish pushes, right, chat? Like this push right here was like these are all bullish major runs that we had and just started to reject, right? Reject. But now, if it started to reject after grabbing liquidity, that's even worse. Not worse, but that's even better, because that's a high indication that if that's what price did and it's breaking back into the range, you should continue to push down and fill the rest of the range. Now, in terms of your next target on where we're coming down to next, again, we have monthly targets, but we have to look at the daily target level. So in terms of the daily target levels, I'll say looking left at all the times you rejected. So going back to this circle, and this circle, what were all the times where like where did price drop down before it started to hover in the past, when it did drop down in the past? So you're looking at this pole here, right? You're looking at this pole right around here. You're looking at this pole here, and you're looking at this pole here, right? And it looks like the last time you came back into the range here, you were able to come down to tap into, I'll say, this level, and then you hovered. Same thing here, rejected, tapped in this level, hovered. This time around, it came down. You rejected, it came down towards, I'll say, more so of like this area, and you hovered. But like, I'll say around here. All right, so I'll say the average area in terms of hovering, or even let's put it back down here. Oops, where'd they go? Okay, yeah, so you rejected there, rejected here, right? So in terms of like the average area where rejected off of, I would say the middle of the range would be safe to say it's going to be around here. So I'll put this as like maybe 1980, right? So if that's what I'm looking at, and that's where price came down in the past whenever it did reject resistance, and this time it looks very similar and we're breaking back into the range, I would assume that if you were to come down on the daily, right, towards the next area of target, your target area next, you could say it's gonna be 1980 next, which is pretty doable. It's not that far off, and looking left, it makes sense because you do tap into some type of minor support once you do tap like 1990 to 1980. And also that lines up perfectly with what time frame we're gonna chat. Going back to the monthly, it lines up with the monthly time frame that we mentioned, right? Because that's the monthly support. Going back to the monthly real quick, we just broke that down a couple minutes ago. We said how this is your resistance on price right now, or potentially resistance, and your next support is down here at 1980, which makes perfect sense with the daily. All right, so that's the daily perspective. Now you can look at it from that perspective, or you can zoom in a little closer and look at it from this perspective. It's the same perspective, I'll say, but like overall, like what does it show here? It shows that you are breaking below, you're still below here. So you have you have a bearish counter that closed back into the range, and then this bearish counter that closed again, and then you have two bullish counters here that all rejected resistance, but they all close respecting. Not once have these two counters ever close above. Therefore, at any given point, you could get a pop up before coming down towards the next support. Now, here's the thing. You have, where's your next target if you were to drop down? It is going to be likely, in this case, 2005, 2006, right? That's kind of what you're looking at next. You're looking at that support to the left there. So if this is your resistance on price, and this is your support on price right here, right? I would assume that if you were to drop down towards 2006, you would need liquidity, right? So if you need liquidity to drop down, right? I'm not saying it's gonna drop down. I'm just saying if it were to drop down the situation, wouldn't price need to grab liquidity first before dropping down? Of course, right? Down towards 2006. That's a pretty steep range. That's like a 200 pip plus range, right? So if you were to grab liquidity first, what makes the most sense right now? You have news at 8:30. Could numbers push price up? And then after 10 a.m. we can move down for the rest of the day? Because this is a daily time frame, right? And if price didn't create a top wick yet, I believe the top wick should be created first. Therefore, in this case, if numbers come out negative, for instance, and price pushes up for NFP, great. After NFP, after 10 a.m., we can look for sells after 10 to come down to fill the ranges. Or maybe NFP, post NFP, we look for sells off rip, right? But the idea now is that, like, if we're still waiting for a top wick, could we be in a position to look for buys? Because the data shows us that we're still in this range here. And therefore, if we're still in this range, any given point, what can happen is you can get one strong bullish candle up, right? Break all the highs, tap 48, whatever the case may be, and then all of a sudden start to reject because we're still respecting that resistance and we're still in that range. Therefore, that range must be filled, right? Because even if you were to drive up in this case, even if price were to be in a situation in some given universe today to drive up towards the highs, before it drives up towards the highs, it's likely going to grab liquidity down to push up, right? So therefore, that's why the move down will make a lot more sense here as well. Because if you were to come down with the daily time frame ranges that you have here, you would come down towards 2006. So you're putting yourself right now in a win-win situation. Therefore, no matter where price goes, you understand that it will come down towards 2006 before it makes that move up, or even before it makes the move down, obviously, because it would just drive right through it, right? So this situation here is perfect because, again, it's a win-win situation. No matter what price does, I'll say it's going to tap 2006 before it does anything else. It might not be today, but in terms of overall daily ranges, in terms of overall daily candle structures, that's what it shows, right? So let's drop down to a smaller time frame because I only have 6 minutes left and see what's going on today and see what we can grab. All right, so it could be buys today, it could be sells today, but what I do understand right now is that we're currently in this range here. So let me go ahead and use a 30-minute time frame because you do have news in 5 minutes. So real quick, I'm gonna mark up my levels just to mark it off. And these levels aren't too important in terms of like ranges because we're not looking to take buys above or below anyways. It's just to mark up and identify that these are ranges formed here. So I have my resistance sitting here at 2038, I'll say. So that's where the current resistance area is. So let me just go ahead and draw a gray line there. Cool. And then I have my next support on price, like right around here, sitting at like 2021. So that's the bottom of my range, I'll say. You have more levels down here at 2014 and 2008 as well. But in terms of the next major or minor support, or you can say major to be honest, I'll say it's 2020. That's a pretty decent level that you have there in price. So again, just to identify our ranges, these things don't really matter too much because we're not taking buys above or sells below these levels. We're looking for positions within the ranges or once you break out anyways. But yeah, that's what I'll identify the current range at. So I'll assume that even if price were to drive down in this case, you'll need some type of liquidity to be happening up here, which means that if numbers come out a certain way and for some given reason price doesn't drive and you get a top wick after news, then we can look for potential positions for sells, maybe somewhere up here to come down towards 2020, or worst case, if numbers come out negative, we can look for buys to go up towards 2042 before looking for sells down, right? Because remember, the overall idea today is that we're bearish on the daily, right? Keep that in mind. But before the daily comes down, I believe you need liquidity. Therefore, the buys before liquidity would be valid. So same exact thing we did yesterday, where we assumed yesterday was going to drive down, but before it driving down, you need liquidity up first. So that's why we took the buys yesterday before taking the sells down, right? But yeah, chat, that's what I got going on today. Pretty straightforward day, I'll say. It's going to be heavily based off the daily time frame. I'm pretty sure if you've been here for at least 2 to 3 months, you would know exactly what the daily is going to do today. But if you're new here, you might be a little confused, but just take some notes and just replay the stream a couple times if you did get confused here. But yeah, you do have news here in about 2.5 minutes. I don't want to, or 3 minutes. I don't want to, I want to have some time to see what happens pre-news here. All right, chat. So I'm just gonna have this line here just to mark it up and not forget that I'll have a line here, but I'm not gonna take any positions just yet. Let me go ahead and delete this. I'm not confused, you guys. I just want to see what happens there. So if you were to come up to grab liquidity again, I'll assume it's gonna be like 2042, but you can even take the buys up towards those levels because you do got a decent range going up towards those areas anyways off the daily. All right, man. I understand though, the daily could reject anywhere, but I would assume that if you were to drive down, again, look left all the times where you drove down the past on the daily, you drove down after creating topics here, after creating topics here, which you don't have just yet. And that's why I believe that price will do that this time around before it does anything else. And this time around shows you that it's going to be at 2046, 2044-ish areas. So I would assume that would happen before you would see a heavy push down. Like you can reject down, don't get me wrong, right towards the bottom of the range, but to drive down like these counts to the left here did, like this, and then like this, you need to grab liquidity up here first. So you might see a push down. That could be a scenario as well, but you might not continue to break below to drop down towards the next support, because that next support is pretty steep. You need lots of liquidity to drive down that steep. But if we do get a position at like, you know, 2048, 2042, whatever the case may be for wick entries, then we can probably attempt swings down towards 1920 off of a scalp trade.